Hello everyone, and welcome and thank you for joining us today. My name is Chloe and I'm the Events Coordinator for Connecting Up and TechSoup New Zealand. For those of you who haven't attended a webinar session with us before, Connecting Up is part of the Info Exchange group. And Info Exchange is a not-for-profit social enterprise that has delivered technology for social justice for over 25 years now. We have over 100 staff across Australia and New Zealand, and we tackle the biggest social challenges through the smart and creative use of technology. So I'd like to welcome you all today to the session, What You Need to Know, NFP Updates for COVID-19 Grants, JobKeeper and End of Financial Year Planning. And that's with Pam Matatianos, who's the co-founder of 2Ps, an award-winning MYOB, Xero and QBE bookkeeping and consulting firm in Australia. Pam has some excellent tips on government stimulus packages for us today and also on the JobKeeper application as well for your organisations, and we hope that your organisations will be able to take advantage of some of these moving on from today as well. Now, before we begin, I will start with a little bit of housekeeping for you today. All lines are muted, so if you have any technical issues, please type them into your questions box, which you'll find in the GoToWebinar control panel. And if you have any questions throughout the session, please also type them into the questions box as well. And Pam's going to answer them at the end today when we'll do a quick Q&A session as well. Please note also that your comments and questions will not appear to the entire group, just to me. Now, if you're on a Wi-Fi connection and have multiple programs open, this can sometimes affect the quality of the audio and video of the webinar. So if possible, please try to close any other internet tabs that you have down or any other programs down to ensure you have the best experience possible today. Please note this webinar is being recorded, and a link to the recording and the slides will be emailed to you directly after the webinar ends today. And Pam will be also providing a link to a whole suite of free templates and resources specifically for you guys that we'll email to you after this session as well. Now, before we start, I'd like to remind you there will be a short survey at the end of the webinar, and we would appreciate if you took a few minutes to provide us with some feedback. Now that's all from me today. I'm going to disappear and I'm going to hand it over to Pam from 2Ps to get things started today. Away you go, Pam.
Thank you, Chloe. Welcome, everyone. Thanks for joining us today in the first series of our webinar presentations, COVID-19 grants, JobKeeper, and financial year-end planning. We have a lot of items to cover today, and it's basically what's on the agenda is some information which you may have some insight about, and government stimulus packages affecting the not-for-profit organisations. And there's quite a few that we're going to go through, some in more detail than others. And also after that, we're going to look at how to best prepare for financial year end. And I'm going to talk to you about some checklists and some tips that I have provided that will be made available after the session. And also what you need to do to prepare for your accountant and auditors. And then I'm going to talk about some survival tips and attempt to answer some of your questions for you as well. So let's jump straight into it. I'll tell you a little bit about myself. I'm one of the directors of two businesses, 2Ps and Bookkeepers for You. We are a nationally recognised award-winning consulting, advisory and bookkeeping business. We're based out of Malvern in Victoria. And we've worked with small business for over 15 years, including not-for-profit organisations. Our clients stem from local, national, and we also have some international clients. So that's enough about me. So let's jump straight into it. So as you may already know, the government has injected over $189 billion worth of stimulus packages into our economy. And these extend not only to businesses, but also including not-for-profit organisations and charities. We're going to review some of these together today and what they mean for your organisations and how you can access these funds if you haven't already that have made available to you. The first one I'm going to go through is the cash flow boost. Around 30,000 not-for-profits have been given a tax-free payment of up to $100,000 by the end of the program to help keep staff and to continue operating through the COVID-19 pandemic. The Morrison government's $66 billion economic stimulus includes support to the not-for-profit sector so that you can have the ability to maintain staff and to continue trading and paying bills. And this is available to those entities that earn a turnover in a year of up to $50 million. And it comes with a minimum boost of $20,000. The package is intended to assist, as I said, for cash flow challenges that you are facing. And the way it works is it's a credit on your BAS of 100% of the pay-as-you-go withholding for the period up to $100,000, that's where it's capped, and with a minimum of $20,000. It is paid in two boosts. So the first boost is up to $50,000 with a minimum of 10, and the second boost is up to $50,000 with a minimum of 10. And the way this works is the ATO calculates a credit on the BAS lodged and delivers a credit to the employers through an integrated client account that you have with the ATO. Not-for-profits that are not income tax exempt, their payments will be treated as tax-free. And the payments are made accordingly to your BAS cycle, be it monthly or quarterly. So whichever way you submit your BAS, that is the way the payments will be made. So let's have a look at the eligibility criteria for cash flow boost. So to be eligible, not-for-profits must have held an ABN on the 12th of March 2020. They must have a turnover of under 50 million and have made payments to employees. Eligible payments include salary and wages, also directors' fees, voluntary withholding from payments to contractors, ETP payments, as well as workers' compensation. Charities registered with the ACNC, so the Australian Charities and Not-for-Profit Commission, I'll refer to them as ACNC throughout the slides, are available regardless of when they registered, as long as they meet the other criteria. And eligibility is determined on prior year's turnover. So it's for the year before. So how do we apply? The cash flow boost, it's an automatic process and it is assessed when you lodge your business activity statement. And it started in the March month or quarter, and the payments will be delivered as an automatic credit on your integrated client account. So if you receive your BAS payment, once you've submitted your BAS and you've got an amount outstanding, the ATO will assess what the PAYG component of that is and place the credit on the account. That will offset any GST liability you might have, and the balance would be refunded into your nominated bank account. Now, if you don't have any debt with the integrated client account, they will automatically transfer those funds into your nominated bank account. The advice I have for you here is to use this money wisely because it is intended to help you get through the coronavirus pandemic, as well as pay your bills and to hopefully retain your staff. The next package I wanted to talk about is the one, the government has released a SME guarantee scheme. And what this does is it enhances lenders to provide credit to not-for-profits by assessing vital funding to help get them through coronavirus. The funds, of course, are intended to help organisations with cash flow, payment of bills, and to cover staff expenses. These are government-backed loans and they're offered by eligible lenders. They are unsecured loans of up to $250,000 with a 3-year term and low interest rates. They will put on holiday the initial 6 months of repayment of these loans, and there is no security or asset testing required. and they will run to the 30th of September 2020. The thing to note is that any interest charges applicable to these loans will be capitalised and hence will increase the loan and the repayment you will have to make at the end. It is beneficial to consider possible refinancing at this point, should you need to. So, to be eligible, not-for-profits must hold an ABN and have a turnover of under 50 million to be applicable for these loans. And to apply, you can do so through the participating financial institutions or lenders. And there is a list of these lenders on the Treasury website. And the government, and those of whom are on the website, the government is providing guarantees to those lenders. The next package the government is providing is an additional $200 million community support package. In this package, it is geared to support charities and other community organisations that provide food relief as the demand for these services surge as a result of coronavirus. This includes emergency relief to vulnerable Australians needing food, clothing, petrol, or even rebuilding workforce capacity for it. Assistance for food relief organisations to source additional food and transport for emergency relief service providers. It's also for immediate scale-up services through the National Debt Helpline, which is often the first point of contact where people in dire straits or financial difficulties tend to go to. Financial counselling courses that will train people and get them into the workforce and hence create work opportunities. And also expanding to safe, affordable finance products through no-interest loan schemes that provide immediate financial relief. Eligibility for these programs do remain unchanged. Other grants and funds available to not-for-profits and are through the way of small business support grants, and these are done through the state level. They've had some, and I think there was one that closed on the 1st of June, unless the government, the state governments extend them or bring out a new one, where you got an additional $10,000 if you were eligible for JobKeeper program as well. There was an additional $10,000 to help you with your cash flow. And also there's support through councils as well. They have measures that would include renter deferral, rebates or waivers of some of the services that they offer. So it is important to try and check with your local government websites or councils to see what sort of things are made available to you. The government has also injected a package for the aged care sector. They've contributed $444.6 million into this, and it includes funding for retention bonuses to ensure continuity of the workforce, as well as funding to support the viability of residential aged care facilities. The other sector is the child sector. The government has early childhood education and relief packages available, and these are done through weekly payments that are made directly to the early childhood education care centres to help them keep their doors open and to also keep their employees into jobs and to continue stimulating the economy. The early childhood education and childcare centres do not need to apply for these payments. They will be automatic, and there's lots of information on the government websites around all of this. So the other one that they've contributed finally some money, and I think the government's also intending to inject some more around this one, is the arts sector. There are a few different types of grants available, but one in particular is the $5 million Resilience Fund to support the livelihoods, practice and operations of Australian artists. There's also funds like the Indigenous Visual Arts Industry Support Programs. They've also injected an additional $10 million for regional arts funds, and they've also released a fund for emergency financial relief for individual artists, which they call the 1,000 times 1,000 price cash for artists. So I would strongly recommend having a look at what's on offer, going to your local government websites and your council websites, or picking up the phone and just having a conversation with these. I would no doubt imagine your Connecting Up organisation would have lots of information available through their website and programs as well. The next program, which is one of the hottest topics in town, is the JobKeeper program. And what the JobKeeper program is, it's a subsidy available to eligible businesses and not-for-profit organisations that have been affected by coronavirus to support them in retaining employees. So the JobKeeper program has initially had $130 billion provided to it, but has since been revised down to about $90 billion. And this program assists 57,000 charities registered with the ACNC. It supports 1.3 million workers in the not-for-profit sector, and it is basically a large welfare program that is delivered by the tax system. And the purpose of it is to incentivise employers to maintain employees. And everyone does need to meet the eligibility criteria in order to be eligible for these programs. So let's have a look at the JobKeeper eligibility criteria and for both employer and employees. So not-for-profits, excluding charities, will be eligible for JobKeeper if, when their turnover is under 1 billion and turnover has dropped by 30% on a comparable period, will be eligible for JobKeeper. And those with turnover over 1 billion and have had a drop of 50% in a comparable period will be eligible. Charities registered with the ACNC must have 15% or more of a drop in comparable periods. Otherwise, they would fall into, the not-for-profits excluding those charities, would fall into the 30% or 50% decline in a given period. The turnover test does not apply to universities and non-government schools. They are registered charities. Employing charities registered with the ACNC can elect to exclude government revenue, including the United Nations and its agencies, from their turnover test. It is a basic test that needs to be applied in order to opt in. So you do need to pass the turnover test in order to be eligible, and that is the first part of the process and probably the most difficult in my opinion. And one thing to note also is the JobKeeper scheme does not recognise non-profit sub-entities, and the decline test must apply to the not-for-profit entity as a whole group. So the turnover of all its branches and its sub-entities. So for employees, they must be employed as of March 2020, and they must be at least 16 years of age on the 1st of March 2020. It is extended to full-time, part-time and long-term casuals that are working on a regular systematic basis for a period of longer than 12 months as of March 2020. You must be an Australian citizen or Australian permanent resident. It is also open to New Zealand citizens and residents for Australian tax purposes. And you can rehire previously stood down employees or terminated staff since 1 March to be eligible for this program. So let's have a look at what the decline in turnover test is all about. So basically there are two main stream of tests that are available, and the main one is the basic test and alternative tests. So there is also what they classify a modified basic test, and this is particularly for group employer labour entities. But if you don't fulfil the requirements for the basic test, you basically then will opt to see if you are eligible under an alternative test, and I will go into some detail around all of those. So basically, the basic test, and with both tests, you only need to pass the decline in turnover test once. So once you're in, you're in. You don't need to do it again at this stage. So the basic test, you can nominate the month you wish to report, and it starts from March 2020 and onwards. Registered charities with the ACNC must show a decline of 50% or more. Not-for-profit universities and non-government schools must show the 30% or 50% decline, depending on what the aggregated turnover, whether you're under 50 or over 50, is dependent on the percentage decline that you need to report. And you must compare this year to a comparable month last year. So if your drop in turnover month is March 2020, you need to review the same period last year. So it'll be March 2019. And you can report either on a cash or accrual basis. So whichever you opt, if you pick March 2020 to report on a cash, you need to apply the cash basis for March 2019. So if you do not qualify for the basic test, then an alternative test may be applicable. And these can be complex to apply, but they should be considered, as the JobKeeper reimbursements are very helpful in assisting organisations to navigate through the next few months to help your workforce manage through difficult times and for your business to have continuity. So let's explore in some more detail the alternative tests. So basically, if you're a new entity and you commenced before the 1st of March, but you didn't trade last year, you've only traded, say, for the past few months, what you need to do is show a predicted turnover month or quarter and compare the average turnover since the start of the business. So compare to possibly the previous 3 months. The second test, if you've acquired or disposed or restructured the entity, you can compare projected to the same business structure for the same period, the month after the event happened. If the entity is restructured and they change turnover, you can provide the month after the event. If you had a substantial increase in turnover, say in 12 months you had a 50% versus 25% in 6 months or 12.5% in 3 months, you can provide an average, you can project and provide an average of the previous 3 months. Complex? Yes, they are. So the next one is if you have irregular turnover, and that is your business is cyclical and has different peaks and troughs with month-to-month revenue, you can provide an average turnover for the last 12 months. Entities affected by drought or natural disasters, you can provide the same period in the year the drought or the natural disaster was declared. You can provide the same period the year before. For the decline in turnover test. It is a complex area, so if you do need help, this is where you would reach out to your BAS agents or accountants or financial advisors. There's also lots of great information on the Treasury website. We've also got a lot of resources, and I've actually put some fact sheets up on the landing page that you will get the link for down the track, and as well on our COVID-19 resources landing page. And you can always go to the ATO websites for further information around all of this. So once you've determined which test is applicable, you must include and exclude certain revenue items from this. So when you're calculating your GST turnover, there's certain things you need to consider that aren't included. So input tax supplies like bank interest is not included in the GST turnover test. Payments for no supplies, example, government grants, unless they're conditional entities undertaking an action. For ACNC charities, included are tax-deductible donations received by a deductible gift recipient, DGR. Examples are gifts from overseas donors or testamentary gifts. Included are gifts of money, property valued at more than $5,000 or Australian shares, that is not a DGR. Excluded are supplies made to Australian government agencies or local governing bodies like the UN, which if the charity makes irrevocable elections, and it excludes universities and schools. And again, there's a lot of details around all of this with the Treasury fact sheets on JobKeeper. So the way JobKeeper payments work, so it's basically a wage subsidy for eligible employers. So employers receive $1,500 per fortnight for each eligible employee. The employer must pay the full amount of this subsidy to their employee, and the payment is taxable income and GST free. And superannuation contributions are optional on the top-ups. So what that means is if an employee normally receives $1,000 a fortnight, there's an additional amount the employer has to contribute, which is $500 to make up the $1,500 subsidy. And the $500 difference, you do not have to pay super if you choose to. Employers can top up higher paid employees, and it does apply to contractors or if you're self-employed and you meet the decrease in turnover tests. The first payment was scheduled 7th of May, so most of you who have entered into the program would have already received your first payment, and they're monthly thereafter. So as soon as you submit your declaration, the payment will be contributed into your bank account. And there is an eligibility criteria for both the employer as well as the employee. So employers must consider providing eligible staff with employee notification notices in order for them to assess if they're eligible to opt in. And employers are required to notify all of their employees that are receiving JobKeeper or eligible employees. It's an all-in approach. So how do we apply for JobKeeper? I'll just recap some of the points I've already gone through today. So do check the turnover to ensure that the decline percentages, whether it's 15, 30 or 50, according to your entity. Requirements, run your required reports from your accounting software to prove the decline in turnover. Provide the employee notification notices to each of your eligible staff. They must complete and sign this as both employer and employee, and all reports and forms should be filed for 5 years. You do not need to send them into the ATO. And step 3 is to register eligible staff to receive JobKeeper. This can be done directly through your accounting software. And then you also have to take the additional step to enrol into the program. And then once enrolled, you need to identify after you've entered your eligible staff through your accounting software. The second process is you need to identify this as well in your MyGov business portal, or you can ask your bookkeeper or accountant to do it on your behalf through the BAS agent or tax agent portal. And step 4 is it doesn't stop there. You do need to lodge a monthly declaration confirming eligible employees and your turnover for the particular month, as well as your forecasted turnover for the following month. The reason the tax department want you to do this is because they want to see how effective this stimulus package has been, and by having those figures as part of their data collection, they can see how effective the program's been and how people are travelling. So I'll just recap. So how do I report JobKeeper and what records do I need to maintain? So through your payroll system for employees, payments to employees need to be processed through accounting software, and it is reported to the ATO via single touch payroll. So once they receive this information, that's when it populates the data into your MyGov and BAS agent portal. And it does also need to reflect the PAYG deducted by the employer. Superannuation is applicable on those payments, as we said, when you're processing them, and obviously not on the top up. And you do need to separate out, when you're entering these payments in your accounting software, the wage subsidy plus the top up separately. So do maintain the split of pure wage and JobKeeper. And maintain your records for ATO and audit purposes for 5 years. Maintain reliable information on how you've reported your decline in revenue and what you use, the method you use in enrolling into JobKeeper. I can certainly say that the ATO, together with the Australian Federal Police, are undergoing audits around this, so it's very important to enrol with true and honest information, because if you do get caught out, there'll obviously be reclaiming those funds, and also possible penalties and even imprisonment. So that is the JobKeeper program. So the government has also extended additional help to not-for-profits experiencing financial difficulties during coronavirus by deferring payments of some of their accounts for up to 6 months. And these include payments of your BAS and IAS, PAYG instalments, FBT and excise payments, and income tax payments. In order to claim the extensions, you do need to contact the ATO to make arrangements for a deferral program. And if required, do ask your accountant or bookkeeper to help you. And finally, which I haven't written up there, superannuation. The government has allowed for individuals to have early access to super if they are struggling or have a decline in their income. And they're allowing 2 occasions for you to withdraw up to $10,000 pre-June and post-June. And I think it's probably fitting to also talk about the SGC amnesty, which is a one-off opportunity to correct any unpaid SGC contributions that you may have incurred over the period. The amnesty applications close on the 7th of September, and I would strongly recommend, if you haven't met your commitment there, to really look at applying for this, because the penalties are very hefty. They can be up to 200% of the SGC charge. So that brings me to the end of the stimulus packages, and I might open up with some polls, I think. Chloe, I would like to see if we can maybe run a couple of polls on the back of that to see how the audience is feeling and whether they've been impacted by some of what I've spoken about so far.
Not a problem.
So if we can kick off with the first poll.
About how much has coronavirus impacted your organisation?
Yeah, fabulous.
Lovely. All right, I'll just launch that poll now. So you'll be able to see a screen in front of you. How much has coronavirus impacted your organisation? So you can select either extremely, moderately, hardly, or it's created more work. I'll just allow another 5 seconds for people to complete that. Wonderful. And so the results are in. We've got a kind of even display between extremely and moderately. 38% say extremely, 38% say moderately, 8% say hardly, and 15% have said it creates more work.
That's interesting, isn't it? More work. Yeah, it certainly has, especially the JobKeeper program. That certainly has created more work for employers and not so much employees, but certainly employers. But yeah, that has been the general consensus, that people have been impacted quite a bit through coronavirus, depending on the industry and the type of business. That's why it's very important to try and take up some of these stimulus packages to help with any cash flow issues you may be having, and any grants that are made available to you. So we might just run the second poll, Chloe, if you don't mind.
Not a problem. Were you aware of the government stimulus packages available? Run that one. So, were people attending today aware of the government stimulus packages available? Please select one of the following: yes, all of them, some of them, or none of them. Just allow another 5 seconds for people to respond. Great, and the results are in. We've got 76% said all of them, 24% of our audience said some of them, and 0% said none of them.
That's so good that a lot of people have already opted into some of those, but there's still a small margin out there, and I'm not sure whether it's because you're unaware, and I'm hoping today that some of the information you take away might alert you to some of the things that are available to you. They certainly have helped, from the feedback we've had from our clients, that it certainly has helped having those stimulus packages injected into their bank accounts to try and help them get to the other side. Although we've still got a bit of a road to go, they certainly have made a difference to some of the businesses out there and organisations. All right, we might throw it in to the next section now. Let's work through, are you ready for the end of financial year? So, oops, sorry. Oh, yeah. So with end of financial year looming, the key factors to consider here is planning and preparing ahead of time. And the sort of things that we would advise our clients is it's very important to keep your bookkeeping up to date, and especially through difficult times like this where, we're not sure what tomorrow is going to bring. Coronavirus sort of impacted everybody's business and organisation suddenly, and the changes we've had to make and the way we've had to control what's ahead is to ensure that our businesses are doing okay. And you won't know this if you're not keeping up to date with all your bookkeeping. Gone are the days where you wait, a month to do your bookkeeping. Nowadays, with a lot of the smarts that are and the software available, you should be able to set the programs up to be able to automate as much as possible to keep your bookkeeping up to date. And it would certainly help you identify any issues along the way before they become, major problems. And it's also great to have that information. So should you need to liaise with your financial advisor or accountant, make appointments, your data would be up to date, and you can then start doing some strategic tax planning around all of that. One of the other things that are important is to constantly review the health of your entity, make sure that you are travelling okay and that the business is doing well. By having your bookkeeping up to date, your financial planner and financial advisor can certainly help guide you along the journey. Book your auditor. Preparing for an audit is a very important process. So preparing that folder with the evidence to support the balances on your balance sheet, identifying any accounting problems and fixing them in advance. As we know, medium charities with the annual revenue of more than 250,000 but less than $1 million are required to submit financial reports that have been either reviewed or audited, whilst the larger charities with the revenue of over $1 million must submit audited financial reports. So it is important to plan ahead, review these financial reports before the board, prepare your financial year budgets, and do take into consideration, especially now with COVID-19, the assumptions around all of that, and what does that mean for your business post stimulus packages. So, you know, these are all coming to an end at the end of September, or near the end of September. So what does that mean? You need to make sure that you plan all of these things in your budgets. Pam Pitt, the other director in our business, is going to run a webinar on the 18th, which we'll talk about at the end of the session. That's going to go into a lot more detail around this area for you. Prepare your stock take for those who manage stock in their organisation, as at the end of the financial year. And although I say June, I know some not-for-profits and businesses can have varying end of financial years. Obviously, the same principles apply. Do pay your super contributions for your employees at least 5 days before the end of June, so the funds do clear into the employee super fund and that you can claim the deduction in the current financial year. And lastly, finalise your payroll and STP and your single touch payroll. And do bear in mind that there is all the complexities this year with JobKeeper, and you need to make sure that you report all of this correctly so that it doesn't trigger any alarm bells for audits. And these are only a snapshot of tips. The checklist that I have developed that will be provided to you after this session is much more comprehensive, but this particular slide is basically covering the major things that you do need to keep an eye on. So when we're looking at our accounting software, we've also created a checklist around the things you should be looking at preparing for end of financial year within your software as well. And this includes reconciling your bank accounts, your credit card accounts, and make sure that those balance back to the final copy of your statement that can be downloaded from your internet banking, as well as your cash clearing accounts. So is there any cash sitting in those accounts? Should it be? If it is meant to sit there, then that's fine. You balance back to that balance, but generally you would have banked your cash and that should come back to zero. Reconcile creditors and your debtors. So it's a good time to have a look at whether you've got any outstanding bills that are sitting there that might have been sitting there for a very long time. They could be duplicated or likely not to be paid or don't need to be paid. So good time to reverse and clean out some of those. And the same with your debtors. If you've tried every possible avenue to try and retrieve them, probably the time now to write them off to bad debts, or have a look at why those accounts haven't been paid and are they likely to be. Reconcile your GST and against your basis and ensure that the balances sitting in your balance sheet are actually what's due to be paid or collected. Reconcile your inventory, make sure that the balance sitting in your balance sheet agrees with what's sitting on your shelves. Reconcile loan accounts and intercompany accounts. You need to be able to go through and identify what do those balances in each of those accounts mean, and make sure that they are, you have evidence to justify what they're all about. Those of whom have payroll tax, obviously you would want to reconcile payroll tax with the State Revenue Office and to complete the application there. Reconcile your superannuation, make sure the contributions are paid. Is the amount sitting in your balance sheet for accrued super correct? If so, ideally it would be what's left over to be paid from your last quarter wages or last month wages. So if you don't pay them before 30 June, then that should be the amount to be paid 28th of July. Reconcile your wages and your PAYG withholding. That's self-explanatory, and that means also balancing back your STP finalisation in your software, that the totals do agree back to what is actually reflective in your ledgers and things haven't gone or are coded to incorrect accounts. Review any assets bought and sold, so maintain evidence of any of those documents to substantiate invoices that substantiate that asset that you purchased or any information on the asset that you've sold. Review your grants and reconcile these up to date and make sure that everything is correct and accurate. Prepare your audit evidence, as we discussed earlier. And of course, you would need to enter your end of year adjustments. And also in any accrued or prepaid entries to the end of the financial year. And then once all that's entered and your accountant has provided you your end of year adjustments thereafter, you can of course close that financial year, or in some software start a new financial year.
We've just got about 5 minutes to go before we'll do Q&A too, Pam.
Oh, I better rush. No problem. All right, I'll skim through quickly. So these are a sample of the checklists that are more comprehensive that I've prepared that you can download off our website. And so what's next after you've done all of that? So from there, I wanted to just talk a little bit about securing your organisation for the future. So I've put together some survival tips, which include keeping your accounts up to date, performing a health check on your business and making sure that you are performing at your optimum, considering the circumstances we are faced with at the moment. Review what government stimulus packages you are possibly eligible for if you haven't already. Speak to your bookkeeper or accountant, make some plans and make sure you book them in on a regular basis, especially if you've got a struggling organisation or business, to have those hard conversations. Act now to improve your cash flow. What strategies are you going to use in order to improve your cash flow? Prepare your cash flow forecast. We will cover some of this with Pam Pitt in a couple of weeks on how to prepare your cash flow forecast, as well as your budgets with budget assumptions in light of COVID-19. If you are struggling and having cash flow issues, do speak to your suppliers, because chances are they are also struggling. People at the moment are in full understanding of how difficult it is for business, so having those conversations will certainly ease some of the pressures you could be facing. Review your supply chain. It's always risky when you're only using one supply chain, because if something were to happen to that supplier, then you could be in a little bit of a pickle. So it's always good to spread things. And prepare a contingency plan. What are you going to do if things get tough? So what is your contingency plan? It's very important to think about this, what you would do, whether it's having conversations with your staff, calling your suppliers, taking up some of the stimulus packages, or reaching out to your lenders. What is your contingency plan? And so how can 2P support you? There's an array of ways that we can support you. So we can help you with those cash flow forecasts and budgets. We can certainly help you with any of the reporting requirements you might have, especially around stimulus packages or end of financial year. We can certainly extend our services around redundancy payments and any payroll assistance, especially around JobKeeper, how to process that correctly in your accounting software, and especially when you're reporting through STP, making sure that that's done properly. We can certainly help you with reviewing your business performance. We have an array of bookkeeping packages, so if you don't have the time to keep your bookkeeping up to date, you can certainly outsource it to people like ourselves. We can certainly help around selecting the right systems to run your business better, as well as remote systems. If you're wanting to use this in the future for a longer period of time and you want to set up some remote systems for your staff, we can certainly make some recommendations around that. If you need help setting up systems for the other side, if you need clarification with stimulus packages that you might be eligible for or you're not sure, do contact us, because we can certainly talk to you around those packages and explore whether you are eligible. And if you get onto our website, on our homepage, if you scroll down, subscribe to our newsletter, because we've got a lot of information out there lots of resources and free downloads and all sorts of things to help not-for-profit organisations and small business generally. So I have prepared some financial checklists, as I've said, so you can download your end of financial year checklist as well as your tax preparation checklist. This is the time that I would urge you to revisit your business and marketing plans. You know, as much as funding's limited, there are lots of clever ways that you could be doing some marketing to keep people coming through your business and organisation. Financial management reporting, and also don't forget to speak to your bookkeeper or accountant. So the next step is 2PC's offering, if you need help with trying to identify any of those stimulus packages or any of the things we spoke about today, a 30-minute free consult. If you use the code word Connecting Up, you can book directly from our homepage on our website, top right-hand corner, and see who's available to be able to book an appointment with. We've also got our COVID-19 resources section under our resources tab on our website. And there's also a link for Connecting Up members to be able to download a few different things that I've put up there for you. So yeah, lots of interesting things. So Chloe, we can go to questions and answers now.
Wonderful. So if you do have any questions, please type them into your questions panel that's in your GoToWebinar control panel. We've got one question here, Pam, to start us off from Ray. The question is JobKeeper classed as taxable income for the business or just for the employee?
It's taxable for the employee, and it's actually, I know Cash Flow Boost is not, but JobKeeper is.
Okay, great. That's the only question we have so far. While we're waiting for potentially any other questions that we might have, is there anything else you wanted to say to wrap up today's session as well, Pam?
I just think the thing to remember here is that everybody is in the same boat at the moment with coronavirus, and you're not the only organisations that are struggling. There's a lot of businesses out there that are struggling. I would urge you to have a look at what is available, because there's, even for myself, because I'm not involved in a particular industry, when I explored some of the not-for-profit grants and stimulus packages available, I was surprised at how many are up there. So do take the time to explore, and I can imagine you'd have heaps on your website, and there's lots of information on the Treasury website and the ATO website. Lots of different grants. Some of them have been extended for those businesses who didn't opt in so far. Yeah, we are in it together, so let's support one another to get through to the other side. And yeah, just practice safe social distancing in the meantime. Look at how to pivot your business if things are still slow. What can you do to change your organisation? What things can you adopt? You know, this whole remote aspect is so important, and I think, you know, it does have its benefits, even though it is difficult not dealing with people directly. So yeah, have conversations, talk to your financial advisors, talk to people like us. We can certainly, you know, have a listen to what you're doing and give you some suggestions, because we do look and help lots of different businesses who are doing some really clever things to pivot their business at the moment. And although they had a slow peak, they're finding now that things are getting back to some normality. So, and that is as a result of thinking outside the square and just adopting new and interesting ways.
Wonderful, thank you, Pam. We do have another question come in from Debbie. She said, you mentioned that JobKeeper relates to the income of all entities, but what if the other entities do not have employees? Wouldn't the income test be on the organisation that is the employer?
It would apply if there's a business participant. So there's a huge criteria around people even outside of employees, if they are also business participants, that they could apply. That could be something that might be best for me to have a deeper dive in, and I can try and get back to, was it Debbie?
Debbie, yeah.
Yeah, and talk to her offline and have a look into that. So there's a lot of complexities around all of that.
Yeah, not a problem. I'll introduce Debbie and yourself via email as well. And I have a question here from Angela. She said, do you have any tips about applying for funding?
Yes, there's a couple of websites. There's one community website that has a lot of different lists of funding. I would say definitely look at that particular website. The funding, there's one called the Funding Centre. There's a few under the individual, depending what sector you are from, they have their own websites that you could actually jump on and have a look at what they have available for their particular industry vertical. Definitely look at Small Business Victoria, because they are very helpful with advising people as to what funding is available for the various different sectors. And and also your financial advisor and your accountant, I think, would be a good starting point as well.
Wonderful. Thank you so much for that, Pam, and thank you for your presentation today. Yeah, it's been incredibly informative, and I think it's provided some great insight to people and just additional tips, and very up to date, which is much appreciated. I know this is a constantly changing world out there, so in terms of government funding, so appreciate you providing such up to date information for everyone too. And thank you everyone for joining us today. I hope you've learned a lot from this presentation and that we answered all of your questions. Connecting Up are also hosting a follow-up budgeting cash flow forecasting webinar, which is on Thursday, the 18th of June, with Pam Pitt from 2P's Accountants. And that's called Future-Proofing Your Organisation, Budgeting During COVID-19. And if it's anything like today's session, I know it'll be incredibly practical and provide some really good tips for anyone interested in who's about to start that budgeting process or is in the middle of it, and cash flow forecasting for uncertain times. So I'll send you a link via after this webinar also to register for that, or you can check out the Connecting Up events page as well via our website to register. So also don't forget that the recording from today will be available and sent through to you guys very shortly, along with the slides. So please keep an eye out in your inbox for that. And again, thank you everyone for being with us. I hope you enjoy the rest of your week, and we look forward to seeing you again next time at another webinar in the future. So thank you, Pam, as well, and good luck.
Thank you.
And goodbye.
It's been a pleasure. Thank you.
Thank you.